It's cheaper to buy than to rent. Let's have a look. Hello everyone, Florian Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee. We're going to have a look at a few articles discussing, well, just the situation we find ourselves in at the moment, where it's cheaper to buy than to rent. We saw earlier today just the prices of property in Cairns, really over a decade. Still lower than what you would have bought in, but rents have been going up. So low rates have made it cheaper to buy than rent, says the NAB, National Australia Bank boss. So let's have a look. First, let's discuss the current cash rate and a few stats and figures from the Reserve Bank of Australia. Now, at the moment, our current cash rate is at 0.1%, everyone. Now, there was a time in the long ago, in the before time, when 3% was considered an emergency rate. Okay? Remember that? 3% considered an emergency low rate. Now we're at 0.1. I wonder if we'll go negative here in Australia. I can't see it happening, at least while Philip Lowe is the governor of the Reserve Bank, from what he said. I imagine it would just do more damage than good, frankly, with regards to consumer confidence. So this is a chart looking at household liquidity and debt. So household finances have improved, everyone, according to the RBA. Disposable income increased by 5% over 2020, boosted by temporary government support. So there's been a lot of government intervention in the market, and I've gone through that in many other videos. We can see here deposits have gone up. Deposits, net offset accounts have gone up also. Mortgage repayments or prepayments have gone up. And household debt has also gone up. But it's slightly tapering down, while you can see those deposits are definitely climbing. Here we have the household liquidity buffers. If you're an indebted homeowner, you've probably got about 4 months worth of liquidity. If you're a renter, you've got about 2 months, although those are both going down. An outright homeowner has gone down to 10 months. We can see home loan, housing loan prepayments, how far ahead people are. Now, housing loans in negative equity, they have actually gone down. Looks like we had a recent peak, about 3.3%, with a large number in Western Australia, Northern Territory and Queensland, and that is slowly going down, approaching 1% again. And here we have the just different loan characteristics, LVRs of greater than or greater than equal to 90%. So you can see it's not as bleak a picture as well, you might think, depending on what you're reading or hearing in the media. We don't have negative equity. It's trailing down. You've got homeowners have got liquidity, and people have paid ahead. So let's have a look at this article now, how it's cheaper to buy than to rent, with all these things coming to head. Because, well, you know, homeowners are a big voting bloc. No one wants to lose them. I think that's fundamentally the biggest issue that you're facing, trying to get into the market. National Australia Bank says bargain basement mortgage rates have made it cheaper to buy a home rather than rent. Maybe that's why so many people are getting in. They're going, you know what, stuff it. I'm paying so much rent here. I'm having to put up with a landlord. I've got some idiot person coming through every quarter inspecting my home where I live to make sure I don't damage this dump where they don't even care about it. I'm going to buy. I don't care. I can afford the payments. We'll see what happens in 4 years' time. We'll make it work. Can you see that story happening? The nation's largest business bank has revealed surging house prices are being felt across the country as more home buyers look to lock in rates at historical low levels. Well, I've locked in, and we got 1.99 for 4 years. I did it because, well, it would stop me from paying off my house too fast and keeping money aside to actually do our renovation, or else Rachel will get very angry at me. NAB Chief Executive Ross McEwen said 16% of lending was coming from first home buyers capitalizing on rates and government schemes to gain access to the property market. He also flagged that it had become cheaper to buy a house than pay rent, with demand for first home buying lending at its highest in more than a decade. There are more first home buyers getting into this market than we've seen probably and at least in the last 5 to 10 years, he said on 2GB radio on Tuesday morning. First home buyers are finding it cheaper to buy than it is to rent. The head of the major bank also noted prices outside of major metro areas had grown faster as more people continue to flock there from inner city areas. The exodus from metro areas has been in part due to the shift to work from home arrangements sparked by the pandemic and Australians looking to live in larger houses. We're seeing a big trend of people moving out of the city, and house prices out of the main centres are going up much higher than those in the inner city, he said. Low interest rates have been sparked by the Reserve Bank's response to the pandemic. In 2020, the RBA slashed the cash rate to assist the economy by making the cost of debt cheaper for banks. Cheaper debt is then passed on to consumers and businesses in the form of cheaper loans. The official cash rate sits at 0.1%. Mr. McEwen believes interest rates will remain lower for several years while the economy continues to recover from the virus-induced recession. The Reserve Bank is determined to keep them low until 2022 and 2023, and I think that is going to be the case, he said. NAB Chair Phil Cornican has speculated whether the RBA will look to tighten lending requirements in an attempt to cool the pressure on the housing prices. Well, as we will know, I'll bring this up here. Our governor from the Reserve Bank, Dr. Philip Lowe, he's not worried about house prices, or not enough to change rates. The RBA will not raise rates to slow the housing boom. Mr. Lowe reiterated the RBA does not and would not explicitly target house prices with its interest rate policy. Instead, he said it was up to the government and financial regulators to address community concerns about soaring house prices. I recognize that lower interest rates are one of the factors contributing to higher housing prices, and that high and rising housing prices raise concerns for many people, he said. There are various tools, other than higher interest rates, to address these concerns, leaving monetary policy to maintain its strong focus on the recovery in the economy, jobs, and wages. See, there you go, guys. They're not going to adjust rates. If anything, they're going to look at intervening other ways in the markets with regards to lending restrictions. We'll have to see. That's worked to some extent in the past. However, he said the RBA would likely only intervene with investor-only loans, which would make it harder to gain debt to purchase a second or third home. The New Zealand Central Bank has already implemented similar measures to curb house prices there. So, who are, with that in mind, now that it's cheaper to buy than rent, who are the winners of the house price boom, everyone? Let's have a look at this article from Yahoo Finance. So the house price boom is a bonus for the banks, according to Moody's. Not just the banks, there are others as well. Australia's strong housing market is a bonus for the banks, developers, and material suppliers, a global credit rating agency has said. Moody's Investor Service says for banks, robust residential mortgage growth will support their revenues, particularly at a time when low interest rates and intense competition are weighing on net interest margins. The earnings of developers and building material suppliers are also set to rise thanks to new residential construction and remodeling, senior Moody's analyst Saranga Ranasinghe said. Ranasinghe? I probably butchered that, I'm sorry. Real estate investment trusts, Mirvac Group and Stockland Group, and material manufacturers Boral, BlueScope, and Intrabuild Australia Proprietary Limited all derive a significant proportion of earnings or revenue from the residential market. Moody's analyst Tanya Tang said record high housing finance approvals and construction approvals for standalone houses are being supported by low interest rates, government stimulus, and a rebounding economy. Although the government's home builder subsidy program has now expired, the extension of the construction deadlines will continue to support sector activity for the next year or more. Moody's drew some comfort that new loans have been largely to owner-occupiers, a segment it views as having a lower credit risk and a positive for bank asset quality. However, banks have increased higher loan-to-value lending as government incentives have increased demand from first-home buyers, it said. But the Reserve Bank, in the minutes of its April board meeting, said there is no notable evidence of a deterioration in housing lending standards. Members agreed that it would be important to watch carefully for increased risk-taking by lenders and any deterioration in lending standards and larger shares of high-risk loans, the minutes released on Tuesday said. National Australia Bank CEO Ross McEwen confirmed there were more first-home buyers getting into the market than had been seen in the past 5 to 10 years. In our books alone, 16% of new lending is going to first-home buyers, he told 2GB. First-home buyers with low interest rates are finding it cheaper to actually buy as long as they have a deposit than it is to rent. He said house prices were rising across Australia with the pandemic showing people could work from home, which has seen a big trend to move out of the cities. House prices out of the main centres are going up much, much higher than those in the inner city, he said. So what are the solutions, and I would say opportunities to this? I mean, long term, we need to get off our dependency on property, but is Australia's obsession with property ever going to change? Is there a political will for it to change? That's the real question. Is there a political will? I think it'll be interesting to see the outcome of this next election. I wonder how many people who are going to equate the economic success that they've experienced from home builder and the construction industry will shift over or will vote for ScoMo at the next election. It's definitely going to be interesting to see. And what about these material suppliers? They'll be ones to watch. Maybe I'll have to have a look at them on the stock market, guys. What do you reckon? Or maybe some brick manufacturers too. So let me know your thoughts and opinions on that one. As always, thank you for watching. Please like, share, and subscribe to the channel. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. You can also help us out by signing up for Stake, and when you fund an account, we both get a free share, or SelfWealth, where if you sign up, we each get 5 free share trades. Take care, guys, and I'll see you next time. Bye for now.